Hey, Talk Tickers listeners. Ready for another deep dive? Today we're going to break down GM's Q4 2024 earnings call.
It's really impressive, how they managed to not just survive this crazy year, but actually thrive.
Seriously, record profits, a big win for investors, definitely exceeding expectations.
What I find really interesting is how they're playing both sides, EV production and their ICE vehicles, that smart two-pronged approach.
Yeah, let's break that down. So record EBIT, right? Hitting $14.9 billion for the year, top of their guidance.
Exactly. And a lot of that driven by a really strong finish in November and December, like they just turned on the jets at the end.
And that EBIT translates to some serious EPS, 10.60 a share, up 38% from last year.
And we can't forget about a much smaller share count, too. They've been dizzy returning capital to shareholders.
Okay, so they're making money and sharing it, but how did they become number one in U.S. sales? It's a tough market.
They were really smart about avoiding those pricing and inventory traps that snag so many others.
Right.
Which helped them boost their market share up to 16.5% for the year, a solid 30 basis point gain.
And they ended 2024 strong, too.
Yeah.
17.5% market share in Q4, highest they've seen since 2018.
If you don't count those pandemic numbers from 2020.
Exactly. So part of that success has to be their EVs, right? I mean, they wholesaled, 189,000 EVs?
They actually delivered over 146,000 of those. But here's a curious thing. They intentionally built up that EV inventory to around 100 days worth back in Q3.
Wait, why did they do that in this market? Seems risky.
Well, the thinking was give customers more chances to actually see the EVs, experience them. And by year end, that inventory was down to 70 days, thanks to those strong deliveries.
So a calculated risk that paid off. All right, let's talk about their EV portfolio hitting variable profit positive in Q4. What's the secret sauce?
It's a few things, right? Production ramped up means better economies of scale, more efficiency.
Makes sense.
Second, material costs, especially for battery cells, went down. Again, economies of scale and improved performance all helps. And finally, the new Cadillac Escalade IQ and Sierra EV, those are game changers.
Definitely have to dig into those later. Okay, but before we get lost in the world of EVs, let's circle back to their overall financial game. I mean, they invested in future growth, made their balance sheet stronger, and rewarded shareholders. That's impressive.
Yeah, no doubt. Paid off $750 million in senior notes early and have another $1.75 billion coming due later this year.
And for shareholders, they bought back, get this, 112 million shares.
Shrinking that outstanding share count under a billion ahead of schedule.
They're serious about rewarding their investors, no doubt.
Yeah.
But we can't ignore the challenges, especially in China.
Right. China's always complex. They've been working closely with their joint venture partners there to, kind of right-size operations.
So new products, reducing dealer inventory, getting production in line with demand.
Yeah, think of it like a reset button on their China strategy.
Got it.
It's not about leaving. It's about making it sustainable, profitable, and they're already seeing some positive signs, even positive equity income in Q4.
Okay, good to hear. And speaking of restructuring, we got to address that elephant in the room, stopping the robo-taxi funding at Cruise.
That was a big move. Shows that they're switching gears on autonomous driving, moving away from robo-taxis towards personal vehicles.
Makes sense.
They're projecting to save $1 billion annually by ending the robo-taxi development.
Wow.
And they're planning to buy up the remaining Cruise shares and finalize that restructuring plan later this quarter.
Okay, major shift there. What I find impressive is how GM's killing it in both worlds. ICE vehicles and EVs, they've got a product portfolio that's really working.
Yeah, those redesigned Chevy and GMC full-size SUVs, the ones they launched late last year, they're actually commanding higher average transaction prices than their predecessors.
Really?
Yeah, the refined exterior, the brand new interior, new models like the GMC Yukon AT4 Ultimate, it's all adding up.
And they'll have a full year of sales for those new compact and midsize ICVs, the Equinox, Traverse, Acadia, all strong performers.
Not to mention Cadillac's back in a big way. Best sales year since 2016.
Cadillac's comeback is seriously impressive. What's driving that?
A few things, right. The Escalade continues to be a hit. The new exterior, the interior is fantastic.
Right.
And the high-performance V-Series, the Blackwing models, those are getting a lot of attention. And of course, the LIRIQ, now the top-selling midsize luxury electric SUV in the U.S.
Cadillac is back in the game, for sure. So what new models are they cooking up?
Oh, get ready for the Escalade IQ, the OPT IQ, and the Vistuke, all hitting the market this year.
All electric.
Yeah, all electric. Should help them grab even more of that luxury EV market. The LPTIQ is already scaling up, and the 7-passenger Vistique is launching in spring, loaded with cool tech and features.
Okay, I'm all ears. Tell me about these features.
Well, for example, the OPTIQ and the Vistique, those will be the first Cadillacs with the AKG audio system, with Dolby Atmos. Imagine cruising in your Cadillac surrounded by amazing sound.
That's luxury. What else?
All Cadillac EVs now come standard with vehicle-to-home capability. Basically means they can power your home during outages.
So like a backup generator on wheels. Brilliant. What about the Vistique or anything special there?
The Vis2 will be the first GM brand to have this new ADAS feature, advanced driver assistance system.
Okay.
It builds on adaptive cruise control and lane centering, so attentive drivers can basically go hands-free on tons of roads, just got to keep a light hand on the wheel.
Not quite fully autonomous, but definitely a step in that direction. Sounds like Cadillac is going all in on innovation. So the Escalade IQ, that's the one I'm most excited about.
Oh yeah, the Escalade IQ is something else. The range, the power, the comfort, the tech, it's all there.
Our customers loving it.
They've already sold over 1,500 Escalade IQs since production started late last year.
That's impressive. Speaking of impressive tech, we got to talk supercruise. It's popping up everywhere across GM brands.
Yeah, their strategy is to keep refining supercruise, keep expanding its capabilities, make it so good people can't live without it, which sets them up for that recurring revenue, the subscriptions like we see in the software world.
Smart move. Turn supercruise into a service that's a revenue stream that just keeps giving. So how are they making it so indispensable?
Well, since launch, they've added hundreds of thousands of miles of roads to the network. They introduced automatic lane changing, hands-free towing.
Yeah.
And about 60% of their supercruise users, about 360,000 people, are using it regularly. And this year, they expect that supercruise equipped fleet to double in size.
That's huge. But are these subscriptions actually bringing in the cash?
It's starting to. Now that those first customers are finishing their 3-year trials, subscriptions are becoming a bigger piece of the pie.
Got it.
Last year, they saw subscription attach rates around 20% from a base of about 18,000 vehicles.
Not bad, not bad. What's the projection for this year?
This year, another 33,000 vehicles will finish their trials, and they're aiming to more than double their subscription revenue.
Okay.
And get this, within 5 years, they expect to hit nearly $2 billion in total annual revenue from supercruise.
$2 billion. That's game-changing.
No doubt about it. And we haven't even touched on their collaboration with Hyundai yet.
Oh, yeah, that's right. What's the scoop on that partnership?
Their teams are moving fast to finalize a bunch of product and purchasing agreements, all about speeding things up, cutting costs, being more capital efficient.
It sounds like a win-win.
Yeah.
Any hints on what these collaborations will actually involve?
It's going to be global, focusing on specific segments and areas of their business. They'll be sharing more details soon.
Okay, can't wait. All right, we got to talk about the big unknown, the policy uncertainty.
Ah, yes. The new administration's policies, potential tariffs, tax reforms, regulatory changes, lots of unknowns.
So how's GM dealing with this? Just crossing their fingers.
Well, their 2025 guidance, which we'll dig into later, doesn't include any of these potential changes. But they're not just sitting back. They're actively talking to Congress, to the administration, stressing how important manufacturing is, and American leadership in tech.
So they're not just waiting to see what happens. So how about those tariffs specifically? Any plans to deal with that?
They're getting ready to handle any short-term impacts using low-cost or even no-cost strategies. And they're holding back on big capital expenditures until things are clearer.
Smart move. Wait and see how things play out.
Exactly. They're playing the long game.
All right, well, I'm ready to hear about that 2025 guidance. Let's get into the numbers.
Let's do it. Hashtag TTS, the deep dive episode 2025-01-28, part 2 of 3. All right, for 2025, they're looking at adjusted EBIT, earnings before interest and taxes, between $13.7 billion and $15.7 billion.
Okay, that's a pretty wide range, huh?
It is. It reflects the uncertainty out there, but also shows they're being realistic, not overpromising.
Makes sense. What about earnings per share?
They're projecting diluted adjusted EPS in the $11 to $12 range.
Okay, so still looking at some healthy profits, even with all the potential challenges. What about cash flow?
They're forecasting adjusted automotive free cash flow between $11 billion and $13 billion.
All right, that's solid.
Yeah.
But you mentioned some headwinds earlier. What are those?
Well, they're expecting a bit of a dip in ICE wholesale volume in North America, as they fine-tune dealer inventory.
Okay.
That'll be partly offset by higher EV volumes, of course. And they're assuming the U.S. industry will perform similarly to 2024.
So a bit of a mixed bag there, sales-wise. How about pricing? Are they planning to raise prices or offer more incentives?
Actually, they're building in a potential decline, 1% to 1.5% in North American pricing.
Interesting.
It's to account for possible increases in incentives or maybe some moderation in average transaction prices, being cautious.
Right. Better to be prepared. All right. With all that in mind, what's the outlook for EV profitability?
They're expecting improvements at the lower end of their target, so that $2 billion to $4 billion EBIT year-over-year range.
Okay.
This is based on wholesaling around 300,000 EVs, driven by a few factors.
So what are the key things driving those EV profitability improvements?
Well, first you have the benefits of scale. We talked about that. Then there's fixed cost absorption, spreading those costs over more production. And of course, they're always working to reduce cell and vehicle costs.
Makes sense. So what about the cruise restructuring? How's that going to impact their bottom line?
Their guidance includes about $500 million of the expected $1 billion in annual savings from that cruise restructuring.
Yep.
They're assuming full integration of those cruise employees into GM by mid-year.
All right, makes sense. Any other noteworthy assumptions in their guidance?
Yeah. They're forecasting variable costs to have a positive impact. Things like commodities and logistics. Those should more than offset headwinds from depreciation, amortization, and higher labor costs.
So keeping a close eye on those costs, good to see. What about their international operations, especially China? Any signs of a turnaround there?
They're expecting a tailwind from that China restructuring, aiming for profitable equity income for the full year.
Nah.
They also expect their international operations outside of China to perform about the same as 2024.
So cautiously optimistic about China. Okay, what about GM Financial? How's that side of business looking?
They're projecting adjusted EBT for GM Financial, that's earnings before taxes, between $2.5 billion and $3 billion, reflects their target return for the credit risk profile and asset mix they're managing. Assuming things stay relatively stable economically.
Got it.
They're also expecting growth in earning assets, both from loans and leases.
All right, so GM Financial seems to be in a good spot. Let's talk about their overall cash flow expectations. You mentioned some headwinds earlier. What are those exactly?
Yeah, they're anticipating strong adjusted automotive free cash flow, but there are some year-over-year headwinds, about $1 billion to $3 billion.
Okay, so what's causing those headwinds?
Well, a few things. They won't have those same working capital benefits they got in 2024, mainly from dealer inventory restocking.
Makes sense.
Then there's the timing of payments for certain liabilities, warranty costs especially.
Right.
And finally, they'll be including cruise spending in their cash flow this time around.
Okay, a few factors there, but nothing too alarming. What about capital expenditures? Any big investments planned this year?
They're projecting capital spending to be similar to last year, $10 to $11 billion.
Got it.
That includes investments in their battery joint ventures.
What are their priorities when it comes to allocating that capital?
The focus is on investing strategically in both their ICE portfolio and building flexibility into their manufacturing, so they can adapt quickly to consumer preferences, whether it's ICD or EV.
Smart move in this market.
Yeah.
Anything else noteworthy about their financial projections?
Yeah, their full-year EPS guidance assumes a weighted average diluted share count of around 1 billion shares. This doesn't include any future open market purchases.
Okay, so keeping their options open on buybacks, good for investors. It's clear GM is performing well, great financial results, navigating a tough market, and their product portfolio is really driving growth.
Absolutely. They've shown resilience and adaptability. It's impressive. But we can't forget about those policy uncertainties that could change things.
Yeah, that's the big wild card. How those policies play out will be crucial. But one thing's for sure, GM knows how to adapt and overcome challenges.
They've done it before. Their history is full of examples of them coming out stronger on the other side.
I'm really curious to see what they do in 2025.
Me too. Should be an interesting year. All right, so enough with the serious analysis. Ready for something a bit more fun?
Oh yeah, definitely time for a break from all these numbers. Hit me with your outrageous but plausible trade idea based on what we've learned about GM.
Okay, but remember everyone, this is purely for entertainment, not investment advice, just some wild speculation.
That's right, not financial advice, just a bit of fun. So, what's your crazy trade idea? Hashtag TTS, the deep dive episode 2025-01-28, part 3 of 3.
All right, so thinking about their push into electric luxury with Cadillac and how they're going to dominate with supercruise.
Okay, yeah.
I'm thinking a long position on GM paired with a short on, say, name a struggling luxury car manufacturer heavily invested in ICE vehicles. The idea is as GM gets bigger with those high-end EVs and starts really making money from supercruise, it could squeeze out some of those traditional players who haven't gone all in on electric yet.
Okay, that's bold. I like it. Risky. But big potential payoff. Gotta say, though, folks, this is purely hypothetical. Definitely not financial advice.
Absolutely not. Just
Yeah.
a fun what-if scenario.
Right, just exploring the possibilities.
Mhm.
It does make you think, though.
It does. And that's what we like to do here at Talk Tickers. Make you think, get you curious, maybe even challenge what you thought about the auto industry.
Exactly.
Yeah.
So we've dug into the financials, the strategy, even threw in some crazy trade ideas. But what does it all mean for our listeners, the Talk Tickers crew?
Right. GM's doing well, no doubt, but it's a complicated landscape. The EV market's changing fast. There's policy changes coming.
Yeah, a lot of moving parts.
It's a tough game they're playing, and to win, they got to adapt, innovate, and keep focused on delivering value to customers and shareholders.
Those buybacks, those were huge. I was really impressed by that commitment to returning capital to shareholders.
For sure, they're putting shareholders first, which is always a good sign for investors.
But they're also investing big in the future, the EV programs, autonomous driving, all that.
Yeah, finding that balance, right? Short-term returns and long-term growth, not easy.
What stood out most to you from our deep dive?
Honestly, it's how adaptable they are. They're this legacy automaker, but they're not afraid to change things up, embrace the future.
Right.
Whether it's their moves in China, the changes with autonomous driving, going all in on electric luxury, they're constantly evolving.
Yeah, they're not sitting still, and that's what makes them so interesting to watch.
Totally agree. GM's a company in transition, and they're a big part of how the whole auto industry is going to change.
So final verdict for our listeners, bullish or bearish on GM?
That's the million-dollar question, isn't it? And of course, we got to say it again, not financial advisor, so definitely not financial advice. But based on what we've seen, GM's got a lot going for it.
Yeah, strong track record, a good vision for the future, and a management team that's not afraid to make big decisions.
Absolutely.
There are challenges, but they're also in a great position to take advantage of the opportunities in EVs and autonomous vehicles.
For sure. Ultimately, whether or not to invest in GM, that's a personal call, depends on your risk tolerance, your goals, how you see their future.
Right.
We've given you the info, the insights, even some out there trade ideas.
Now it's up to you, our listeners. Do your research, make an informed decision.
Exactly.
Thanks for joining us for this deep dive into GM's Q4 earnings. Hope you found it useful and interesting.
Yeah. Thanks for listening, everyone.
And until next time, stay curious, keep those trading algorithms running.
This is Talk Tickers, signing off.